The Aussie property market soared 60% in a decade, and the future looks bright. Hi, and welcome to Property NXT Talks, where we, your hosts Cilla and Luke, share banter on life and Aussie real estate investing specifically for expats. As Aussie expats in Singapore, passionate about property and experienced in investing from overseas, we'll share our insights on growing Australian markets, residential and commercial property investment strategies, lending options, and more. Ready to talk property the Aussie way? Let's go. Hello, welcome back to Property NXT Talks.
Hey, Cilla.
Hi, Luke. How you doing?
Really good.
What you been
Good
up
to be back.
Yeah, I know. We're back for our
Back
episode
under lights.
4, under the lights in our very professional studio.
It's awesome.
Yeah.
Very exciting.
It's been good. I just got back from the Middle East, actually, with my family. We went
What'd you think?
It was impressive, actually. That's the word I have to say. So we went to Dubai, Abu Dhabi, and saw friends there. And then we flew to Riyadh in Saudi Arabia to visit my sister and her family. She's been living there since January last year. They went over. Her husband works in property development management and has heading up some amazing developments over there. And I think what surprised us a lot about Riyadh is, I mean, we were expecting it to be dry and sandy. It's super hot there, but so much ambition and change happening there that I think it's going to be a really different place in 10 years.
All about real estate with you, Cilla. All the audience wants to know is, did you get to Ferrari World in Abu Dhabi?
We didn't.
What? I told you about it.
My youngest son would have loved it. He loves cars.
It's the world's fastest roller coaster. But I'm too big, too tall, too chubby.
Oh, well, see,
they said you can't go.
Problem.
So I sent my wife and she had a great time.
We had the opposite problem.
With
Our
her
kids
friend.
are too small, so they wouldn't have been able to go on any ride.
Well, next time.
We did go to the beautiful mosque in Abu Dhabi, though.
Yeah, I had to wear the full outfit when I went. I was an idiot. I wore
Why, are you wearing a singlet?
I wore short shorts. My knees were exposed. They made me put on the full gown.
Oh, wow.
Good look. I've still got it.
Amazing. We'll have to share some photos.
Yeah.
We also did a desert safari. We went out into the sand dunes with the kids and went out on the four-wheeler in the sand dunes, which was pretty cool. And then just had like an experience. Saw camels in the wild. Yeah, it was pretty
It's a fascinating
awesome
part of the world. I really like I haven't done Saudi Arabia, but I love the UAE. It's so much happening there. Like, it is just happening.
Yeah.
There's plenty of money and they are so progressive in everything they're
City.
trying to do. Yeah, it's a very impressive place.
Big dreams.
Yeah.
I hope they achieve them because it was,
So what are we talking about today? What has brought us back here?
We're here today, episode 4. We really want to talk about portfolio diversity and what that means. And we've got our guest speaker, Jamie Burgmann. Yes, my husband, to talk about...
AKA Sugar Plum Dumpling.
I've never called him that.
That's what you call me, Luke.
We've got Jamie here. Thank you, Jamie, for joining.
Welcome.
Thank you. Good to be here.
Jamie's got nearly 15 years of financial advising experience, 10 of those in Singapore. And then it's interesting, we've got Luke with nearly 25 years of real estate investing experience. So we've got two experts in the room on the asset classes of finance and property. So I think we've got some interesting questions. And then what we really want to uncover today is diving into a topic that's really crucial for long-term wealth building, which is diverse portfolios and how do we build them? What does it mean? Before we get started, Jamie, give us a bit of background about yourself and what you do here in Singapore. And any other stories you want to tell?
Well, thank you for having me. It's good to be here. A bit of background to myself. Been in Singapore for 10 years. Before then worked here at Macquarie Private Bank back in Australia for 5 years. But the big thing that I do is help Australian expats make the most of their time in Singapore. We all know how favourable Singapore is from a tax perspective and getting ahead from a wealth accumulation perspective. So, it's making the most of their time here, but then also the big part is transitioning that wealth back to Australia and how they do that in a tax-effective way, essentially. That's my 2 seconds.
Good elevator pitch.
Very good elevator pitch.
Well, 10 years
what do you
practice.
call it? Wealth accumulation.
Yeah, making money, mate.
Making the moolah.
Making the money.
Making money.
Up here when we first met Jamie and Cilla. I asked Jamie, I had this theory coming to Singapore that, 3 years of work in Singapore was worth about 10 years of work in terms of savings in Australia. Do you remember this conversation?
Yeah.
And you said to me, actually, we've done data on this, which blew me away.
Yeah.
And you thought it was more, didn't you?
It's about 3-1. So 3 years back in Oz is 1 year up here. Yeah, so you're pretty much on.
That's pretty accurate, which is amazing thinking about tax and how expensive it is to live in Singapore.
Yeah.
So you can still, if you do it properly, you can really accelerate your end goals for back home.
Yep, definitely. Yeah, it's all about surplus income and what you do with that, essentially. Obviously, cost of living in Australia and Singapore is very expensive, but
in Australia it's different. Depends on where you're from, right? I think Sydney's quite comparable to Singapore.
Yeah.
But other parts, they're getting there, but not as much.
Yeah.
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 Sorry to
it's
throw
fine.
my 2 cents.
I was just being like, how do we take this back to the topic? Because I think we could talk about this all
diversification,
day.
Cilla.
But yeah, no, I think because what we found, like Luke and I, in this Property Next journey, we've met a lot of people who either are like, yes, I want to invest in property, I know all about it. And then we've got other people who are like, I sort of invest in financial assets, not really sure about property. This is obviously its liquidity and its ability to control more of what you want to take away from it. Property is a bit more long term. And so I thought, why don't we either debunk or ask some of these questions that we sort of were thinking about talking to these 2 different audiences. And because I think something that is probably a bit different about how you operate, Jamie, is you're quite pro property. You've, we've been in property for a long time, as well as you manage financial assets for your clients and us as a family as well. So I think that's what I would see as a diverse portfolio. And as we set up the chat today, love to ask both of you. I feel like I'm like an interviewer now. We'll just transition into...
Watch out, Luke, we're in trouble.
Mrs. Rogan.
I'll be a host. This is my own talk show now. What does a diverse portfolio mean to you, and why is it important? And I think it's polite if we give our guest the opportunity to speak first. Jamie.
I think with diversification, that can be a number of different things. You can have diversification within property investment, for instance, and I think Luke can go into a bit more detail on that. You can go diversification from a shares perspective. There's obviously alternative assets like gold, Bitcoin, things like that as well, which can obviously diversify your portfolio. But from a share perspective, you can that as a regional perspective. You can look at it as a sector perspective. So obviously looking at tech versus consumer staples. You can look at it.
Consumer staples like.
Consumers like investing in like Colgate, for instance, because people consume that essentially. Versus you look at tech, where you're looking at Meta, you're looking at Alphabet, those type of investments. Okay. And then you can look at a regional perspective. So obviously investing in S&P 500, which is the US market, essentially top 500 companies in the US, versus, for instance, investing in the ASX 200, which is the top 200 companies in Australia. So there's a wide range of diversification strategies within specific asset classes or across the various asset classes. And one of the things that I do is kind of look at that diversification for the financial side, but then also look at it from an asset class perspective. And the big thing is making the most of each asset class in each jurisdiction. But I'll go into that in more detail.
I find I could ask him so many questions.
Yeah,
go for it.
I'm a novice at share investing. I've tried, I've dabbled, I've failed, I've had some successes. My wife and I have some shares, but we're majority real estate because real estate's a skill set that I look at every day of the week, and we've done really well out of it over time. But there's so many stories, there's so many commentators, there's so many things like. Yeah, we could ask questions, couldn't we? And I think the audience could as well, and that's sort of why we started this process. But from a real estate perspective, what is diversification? It's can be anything. Like, say, for example, you're a residential real estate investor, or you've just got a principal place of residence. Diversification can be geographical. So you could say, okay, I own my property in New South Wales. To diversify, I may need to buy a property in Victoria, Queensland, Perth, Adelaide, one of those. Just geographical spread can be a thing of diversification. It can be an asset class, house, townhouse, apartment, another version of diversification. Then looking at different spreads, we also look at the commercial real estate space with Property Next. And within the commercial real estate space is what's considered diversification, because you have assets like health-related assets, healthcare assets that, can be considered a bit of a, I was talking about this morning, I've got a complete mind failure here, but that's sort of a recession-proof asset, whereas, you've got other assets that will boom time. So you can diversify out in those ways. So, look, it's a really space that I think personally it's a one-on-one conversation. You know, it's not a one-size-fits-all.
Yeah.
You know, and it's a bit of your appetite as either as a family group as to which way you want to go, and your exposure to different markets. That's the way I look at it.
Yeah. I think it's also from a client perspective, it's about their objectives. So are they in the wealth accumulation or wealth building phase, or are they in the kind of retirement phase where income's very important?
There's a risk element too there,
there
isn't
is,
it?
yeah. So it's like, how long do you want to hold the asset for, whether it's shares or property? And also, like, what do you want from that asset? Is it you want to go from $1 million to $2 million, or you want to draw $100,000 a year from your investment? So there's that type of thing as well.
It's the trick. It's an individual or a conversation they should have with someone like us, hopefully, but you know, someone in these worlds that can with what their appetite is for risk, or being quite a neutral sort of investment that'll give them a good return.
So just to summarize, from a shares and financial assets perspective, diversification in that is different, like assets like gold, crypto, sectors, tech, or consumer products, or others,
and regional.
And so really understanding what's the best portfolio look like for you, to optimizing for, I guess, tax and wealth building, and what the client's ultimate end goal is. And similarly, property, we have a lot of different types of property, whether it's in the commercial or residential space as well, that comes in varying different price points and returns,
and
the
location metrics.
And the location metrics too. So that is the diversification of the property asset class as well. What might, like someone who's only ever really done financial and not interested in property, or not interested, but haven't explored it yet, and even the vice versa situation, what would you think their pros and cons might be when they're looking from a financial investment perspective to a property, and vice versa from a property investment perspective to finance? What's the pros for shares? What's the pros and cons for property investing?
Take it away, guest.
So for me, I think the beauty with property, and I think everyone who's listening, we've got property in a number of different states in Oz, but you can use the bank's money to make money, I say. So the leverage ability, so if you put 20% down, 30% down, you're able to, say, for instance, if it's, again, using the $1 million, put $300,000 down rather than $1 million down, and then you can have $700,000 of the bank's money actually working harder for you. Again, in Australia, financial assets are taxable, but you can use that as an advantage. So negative gearing, and you can go back with tax credits if you do go back to Australia, and things like that is some of the things that I help clients plan for. The kind of things that you just have to be aware of with the property and is, one, being able to service the mortgage, and then the two, having the flexibility to be able to withdraw money when you needed to. So whether that's having money in an offset account that you've got, or having other financial investments offshore, for instance, where you can able to take money out before you go back, pay for relocation costs, pay for a new car when you go back.
Liquidity is a big thing, isn't it?
Liquidity is a big thing. And I think there's you can see all of shares. You can take them tomorrow, but you can also, you get them tomorrow. Whereas, like, obviously with Trump and everything that's happened with that recently, shares have gone down 10% overnight. But they also can potentially go up 10% overnight. But with real estate, it has that kind of longevity. And as you mentioned before, it takes 3 months to potentially sell a property. So I think, there is that more stable side of it from a market perspective.
And from a this is me asking another question, Cilla. Sorry,
right.
But from a real estate side of things, from a money, you look at shares. You've got to put all the money in. So you've got say $1 million property versus $1 million worth of shares. It's $1 million of cash in, and you're looking at your returns. What's the returns on the share market? Is 10% good?
Yeah, it just depends on, again, where you invest.
So 10
the average S&P, as mentioned before, US is about 13%.
So 13. So you put $1 million bucks in, year on year, you should make 130 grand.
If you've got it all invested in the US previously.
But that's not a very diversified portfolio. No, I'm
it's
just
not.
joking. I'm just joking. But yes, for the sake of this discussion, it's hypothetical.
Theoretically,
Aussie shares are about 8%.
Okay, so 13, let's just use that as
an
example.
Let's use 10. 10's a good number.
So you make 100 grand a year, fantastic return. But then in real estate, so our conversation is a bit about diversification on how can we do both.
Yeah.
So in real estate, what Cilla and I do and try to promote to people is we're very concentrated on helping Australians buy into the new build sector because we believe there's an element of natural and manufactured capital growth during the build phase, the acquisition and build for the developer. And so, if you can buy a property for 10% down, wait 12, 18 months for it to be completed, there's an element of growth that happens before you actually even have to put money in for your mortgage. So with that 10% down, 100 grand deposit for $1 million property, leave 900 grand in a share portfolio, the chances of that then going up by 10%, which we've done previously, you're then making, but it's 10% value uplift of $1 million, not the 100 grand. So you do actually make another 100 grand, but you're investing only 100 grand.
Yeah.
So there's a
Doubling
really good,
your money. Yeah.
Doubling your money. Yeah. So that's kind of where we're trying to sort of educate people onto the benefits of both, aren't we?
Yeah.
But not needing to put all your eggs in one basket necessarily, but spread it, but depending on your profile.
Yeah. I think if you're comfortable with leverage, like buying property with leverage is a thing. Obviously, being able to leverage as well. Obviously, I'm not a mortgage provider, but banks, you have to go to the right bank to be able to get a loan for offshore and things like that. But if you can, why wouldn't you use it? And again, back to that saying, like, use the bank's money to make money. I'm more for that. And then, with the example before, if you're making 10% on that 1 million with only 10% down, again, you've doubled your money, but what do you do with your other cash flow to make sure that you can put that 10% down? Again, you can't buy 10 properties for that 10% because you won't be able to service a mortgage and things like that. So it's a bit of a balance. And again, as you mentioned, it is about the individual, but it is about kind of having that balance between, okay, well, I've got to make sure I've got cash available to service a mortgage. And if you use shares in that example, you're always liquid. You can obviously get them tomorrow. Whereas also you can use the bank's money to make money with the leverage as well.
Yeah, and it's important to note we use the word liquidity, that if you have to sell a piece of real estate, best case scenario, 3 months, because you've got to think about getting it on the market, get right offers, and then naturally speaking in Australia, there's what's called a 6-week settlement period. So if you allowed 3 months as a bare minimum, so your availability to get the cash is not like shares. So if you desperately need cash, or have availability to cash, then that's where that diversification piece comes in.
Yeah, I think the transaction costs as well, because you've got capital gain tax. Obviously, if you buy the right investment, you should have to pay capital gain tax, but paying tax isn't a problem because you've obviously made money on it. So when you don't make money, you don't have to pay tax.
Yes.
And then obviously buying this as well. So if you're buying property, it's more for a long-term play. You're not looking to get in and out within
particularly up here, as us Aussie expats know, you don't get any tax advantages if you sell. I mean, our natural advice, isn't it, Cilla, to all is to buy and hold.
Yeah.
If you can. If there's obviously there'd be why people have to, but there's just a big hit from a financial point of view with the capital gains tax at not getting that 50% discount.
And we'll get someone, an accountant who's a specialist in tax, to sort of break that down for us a lot better, because I think there's also a lot of misconceptions about like tax and property in Australia, so we really want to make sure we unlock that. But we're not today. Today is really about the...
Should we tell them about what's coming up in the middle of May?
Yeah, so actually, if you're in Singapore, you get to meet Jamie and Luke live in person.
And Cilla. and Cilla.
But I just think it's a really interesting dynamic having you two in the room together, because I also have found that there are wealth managers out there who are not supportive of investing in property. And I get it. Like there's
and real estate people not supportive of invest shares.
True. And real estate people not supporting financial asset investing. And I think I personally am like, can't we all just work together? Like that's just because I think for us, for Jamie and I, doing both has been rewarding for us. And I wish more people could see that opportunity. And if you're really there to benefit your client and what they're looking for as Australian expats, they're all going to want to know something about property or have some foot in the door with property, because that's just, as we said in our last episodes, a few episodes ago, that it's a national sport in Australia. And it's sort of a rite of passage to own a bit of property in Australia if you are Australian. And so that's just always going to come up if you've got an Australian client. So I think for us, it was like, I think it's really unique having you two in the room who have worked together to provide the best outcome for a client.
I think it's about about the conversations we have, right?
Yeah.
It's you talk to both of us, and it may not suit you at the moment to buy a piece of real estate. It may suit you to just invest, or it may be vice versa. But if you can have those conversations, we come at it from we always talk about an education first process, is understanding why you would do this, what's the benefits of doing it, what are the negatives of doing it, And then, but if you can do it from both of it, then, you know, over a period of time, living up here, earning good money, you should be able to build quite a substantial portfolio.
Yeah, but I think like some of the advisors that I've spoken to who are like negative property, I think they just bury their head in the sand. Like Australians are going to want property, so why not help them on that journey?
And you can make a lot of money out of property. My goodness.
Exactly.
Yeah.
And if from a client perspective, if they're for 10 years and they buy 4 or 5 different properties during that period, plus also the investment portfolio, then that's a great outcome for the client. I think it's the people that potentially look after their own back pockets, whether it's property or shares.
There's an element of that.
You've got $1 million to invest. You have to invest all of it into property, or you have to invest all of it into shares. But for me, I like that because property's worked well for me. Shares have worked well for me. So and it is about kind of making sure that you can have the best of both worlds. From liquidity point of view, we obviously needed a bit of cash recently, so I'll be able to sell some shares rather than sell a property. And if I had,
what, you got to buy Cilla something? Are we getting
We've already married, mate. That's
we're getting breaking news on the pod today.
Well, someone likes travelling, so every month we're in a different place.
Impulse travel activity. Oh my gosh!
Exactly.
What's the event, Cilla? Tell us about the event.
So it's really about
I can't wait.
Tips and case studies of mastering a diverse portfolio. So today we've discussed like what a diverse portfolio is. Means from a financial asset perspective and property, and best of both worlds, and having a truly diverse portfolio. So we really want to talk about some real life case studies. If I had a surplus cash of 250,000 or 500K, what would we do? Like, you know, collectively, some opportunities as well to invest in as well.
I think if you've got a property and you're interested in shares, or vice versa, you've got shares, you're interested in property as well. You know, we kind of just want to open up that conversation, don't we? And sort of, you know, debunk any questions people might have, negatives. You know, I mean, if I can say, we've had a bit ourselves about, you know, your world, the Trump tariffs, all the things going on in the global market at the moment. A lot of our more sort of senior people that we talk to, Aussie expats living in Singapore, they tend to think that all of the global issues are going to affect the Australian real estate market.
Yeah.
And our message is pretty simple. Unfortunately, or fortunately for property investors, the Australian government and the Australian immigration process just can't get out of its own way to approve enough property to have enough people there to be able to build the properties. And the supply and demand issues that is Australian real estate will make sure that the Australian property market keeps up.
Yeah.
And the amount of data points we have on that it's scary. And great for property investors, but scary for the nation, because there's going to be a property for a long time to come.
Like every second day there's a news article on housing shortages.
And that just is one simple formula of property's going to go up. Yeah,
I think that's one thing that has surprised me coming into the real estate realm. Sometimes Luke talks about how much this property or this region is going up by year on year. In the Sunshine Coast, it's been 13% year on year for a market. And I'm like, no way, that is so high. Like, how can that be possible? Like, I was a bit of a disbeliever, which I'm sure some of the people we talk to have the same viewpoint. But you look at the numbers and you look at the history, and then you hear all this supply and demand issues, and it all kind of makes sense. But that's because we're in it every day, and we see it every day, and it's now part of our bubble. It's not part of everyone's bubble. So I think it's just been a really interesting eye-opener that there is just a lot of growth there, and it's something to really like.
And we have to talk about our favourite topic at the moment, the foreign exchange rate, the AUD versus the SGD.
That's another bonus, isn't it?
I hope everyone's sending money home.
Yeah.
Hey,
exactly.
My goodness, it's good value.
It went up to 125.
It was crazy.
A couple of weeks ago, which
I wasn't able to act. Were you able to act?
A little bit, but more USD to AUD, not SGD to AUD.
That's exciting.
Yeah.
Yeah, it is. It's a good reason. So
yeah. You said you have 100 questions for me. I'm sure other people, listeners, will have more questions for me on the share side, and similarly from a property investor, from a share investor to a property, there's things that I didn't know that I've learnt from both of you over the last 18 months during this journey as well, that I've learned stuff, and I've already had 3 properties back in Australia, so there's stuff that
always
you can continue to learn.
Yeah, exciting.
Yeah, exactly. And I'm all about education too.
Are you the young Warren Buffett?
I wish.
That's about
yes, I hope so.
Look, unfortunately, gone to the days
retiring today.
Tell me that's
gone
true.
to the days of the advisor stands there and picks stocks. We use people like Warren Buffett because they're the ones who
legend
all the day in day out. They're looking at opportunities. Why not outsource that to those experts and let us do the relationship management. Yeah.
Excellent. Anything else that I didn't ask that you guys wanted to mention today?
No, I'm really excited for the event.
Yeah.
Yeah, I want to see how Jamie get a live audience.
He'll be fine. He'll be fine.
Yeah. I'm just facts and
Loves to
figures.
talk,
I'll just
this
have
guy.
lots of things.
Facts
just
and figures.
Death by a PowerPoint.
Yes.
Well, thank you for joining us today, Jamie. And looking
Where's the
forward
event
to
at?
seeing you at the
1880?
event.
March 21?
Yeah, we can.
May 21.
We're doing an event next.
Oh,
so.
Cilla, I don't know. You didn't brief me on promotion 24/7. Never stop promoting. Isn't that the thing we're supposed to do in our world?
is.
Yeah, but this is going to be like
Shut up.
forever
is what I'm
old.
thinking. Is that what you're getting, Jamie?
100%.
Yeah.
Thanks, Jamie, for joining us today. I hope it was eye-opening for our listeners out there to hear about two perspectives of diverse portfolios and also the benefits of why we need to think about a true mastering a truly diverse portfolio, which is looking at both of those financial asset classes and others, as well as property too.
Exciting.
We do have an event coming up end of May in Singapore. Head to our website for more details. And yeah, we'll really look forward to bringing our next episode to you, which will be more about the tax benefits, or sort of debunking and demystifying the tax, land tax, capital gains tax in Australia. We'll have another special guest on that episode too. So we look forward to having you next. If you found this episode really helpful, please share it with just one person. You'd be doing us a massive favour. And yeah, welcome to Property NXT Talks. If you're new, we'll talk to you soon.
Bye.
All right.
Cool.
Thank you for having me.